Hello and good morning. Sorry about the delay in getting started today. It's 8:04 a.m. Chicago time on Wednesday, the 13th of September, 2023. This is episode number 2536. 2536, as they say in French. Um, Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we are, US CPI released. Now that we have it done, the market can move, right? No, I don't think so. It is rollover week. We still have a lot to do still in the roll. The roll analyzer shows that the pace of the roll is still quite slow. And things are it's caught up quite a bit yesterday. It's moving towards the average. Currently the roll is 73.11% done out of 78.82 average. So we still have a little bit to go. So instead of completing this morning, it's probably going to complete tomorrow. And then we still have options expiration. We still have triple witching Friday. We still have options expiration and the delta hedging that takes place, delta gamma hedging that takes place on Friday. Overall, this week is going exactly as expected. So that's where we are. So the inflation number, the headline inflation number wasn't as important here as it normally is. Came in at 3.7% versus 3.6. Expected the prior 3.2. So this is a little uptick on year inflation for August was expected, not a big deal. The month-on-month was in line at 0.6%, but what was important here is the core inflation needed to be in line or lower. Core inflation upticked to 0.3%, 0.3% versus 0.2, excuse me, instead of 0.2, and that's not good news, especially since the rally in energies, we'll look at that in a minute, really occurred throughout August, and that part of cost, a higher cost, isn't factored into consumer prices yet. So September's number is probably going to reflect that. And so, we fluttered up quickly, we fluttered down quickly. We went back to the SOC across the board. The SOC, in other words, the scene of the crime, or the point at which the number interrupted the auction for the ES, was 45.12 even. And as you know, we're trading at 45.15 after going down to 44.95, which tagged our 44.96 by 2 ticks yesterday. We talked about the 44.96 below, and it pushed through it by 4 ticks and just shot right back up. So overall, inflation is behind us. U.S. inflation is behind us. Japanese PPI is higher than expected, and GDP growth out of the UK is lower than expected. Industrial production, so there's a lot. Industrial production out of the Eurozone came in at negative 1.1, worse than negative 0.7. Expected month on month, the prior is plus 0.4, so that's not good news. Great. The GDP in Great Britain was at negative 0.5% versus negative 0.2. So not very good news there. And then looking ahead, we have crude oil, a 30-year bond auction. You want to pay attention to that. And the monthly budget statement, which isn't likely to be a mover. So there's some stuff going on. Apple announced yesterday its iPhone release. Apple's being impacted by a lot of news out of China. There was news that came out that the Chinese government's forbidding all government employees from using Apple products at work. because they suspect a security leak. This is basically what the U.S. did with Huawei about 3 years ago. China also announced, or Huawei also announced that it is now releasing a new phone, which is super duper upgraded chip, which is expected to eat into Apple's sales. And so these are all things impacting Apple. We saw when the release came out, we saw things kind of flow upwards yesterday. And then as soon as that was kind of baked in, we saw the market drop. But overall, it's just noise in general. So that's where we are. The S&P, focus on the S&P now. The S&P is in a multi-distribution auction in the overnight session. We'll talk about that in a minute. And the volume is about twice what it was at this time yesterday. So we're finally catching up on the roll here. And of course, there's more to price in today with the CPI. A lot of whatever positioning, hedging, whatever it is. Inventory's negative 48% short. So 48% short means there's 48% of the volume is more short than long versus prior close. A lot of the volume profile overnight occurs below the close. And we have 24 and a quarter points of range with a pretty weak high in the S&P. So let's explore that a little bit. First, let's take a look at what we expected yesterday. Yesterday we talked about, hey, we're opening at the low end of the range after closing way up here at 25.39. We talked yesterday about 33 to 35 until I was blue in the face. I mentioned it at least 30 times in the video, and I said any test of 33 to 35 is likely to fail, and if it fails, if it pokes through and gets back below, it's very likely to end the one-time framing up on the S&P, and if that's the case, then we're looking at 06 as a key price, right? Those of you who are here might remember that. 06 as a key price, and then in my comments on Convergent Chat, I talked about the 44.96 as the next key area to test below here. We went to 95 on the CPI. So overall, the S&P in its unflattering way did what was expected here. Let's take a look. So let me bring, why is that profile missing? Oh, it's loading. So in its unflattering way, it opened up at 19. No, it didn't. It opened up a little bit higher. It opened up at 20 something. Where did it open up? 23. Open up at 23. Quick touchdown. Pushes up. Pushes to 32.50. Remember, the zone is 33 to 35, right? And pushes up to 32.50. Comes right off. Puts in the IB right here. Breaks it. And then turns the other way. This is about when the Apple stuff was going on, and it breached the 35 on pretty good volume, by the way. Some pretty big bubbles were going off, a lot of collisions going off, a lot of lifting above the IB yesterday at 32.75 through 35. There was a lot of volume there, and it almost got to the settlement price, and then it came right back in, and it finished on a neutral extreme down day, and it ended up not quite getting to the 45.06. It got to the 45.07 and a quarter, so missed it by 5 ticks. And then from there, we had a nice fat distribution in the overnight session, and then we extended lower in what looks like a P-shaped profile, but if you expand this, you'll see that it's got multiple distributions in it. It's got, a bunch of different distributions in it, and it's that's a goofy looking guy, right? Right there, big fat blunt. multiple distributions there, and what we had in the overnight session is a bit of an inverted head and shoulder pattern at 45.05, and we are trying to squeeze a little bit higher. We have multiple highs on the overnight session at about the same range of prices between 45.18 and 19. You can see here, tag, tag, tag on after the CPI, another tag. You can see collisions, so there's liquidity being provided at the 45.19 area. For those collisions to take place, that liquidity had to have been there. The delta is positive, but the delta is not really reliable right now, and we're sitting sideways. The full session VWAP, full session mid are beneath us. The overnight point of control is above us. The yesterday's range is above us. So what we've done is what we had talked about a little bit, in that if we break the 1950 and break this one-time framing up with higher lows, if we end up doing that, we're very likely to start to just cycle through here and go into balance into expiration, and that's basically what's happening. So it's yesterday was relatively balanced on the TPO chart, not so much on the volume chart. You can see, but you can see the point of control hovering. You know, whether it's a TPO point of control or a volume point of control, it's hovering around the mid of the session, with the market now opening below value in range. So the expectation this morning is an open retest, reattempt to regain, and this is responsive buying because we're opening in range out of value. Pay attention to value low here. Value low for volume is going to be around 45.15 or so. Same with the TPO value area. So I'm looking for at least a test of this 15 area. And then I'm looking for this thing to roll over and start to move towards the 4,500 and breach the overnight low. So I'm looking for this thing to kind of face downwards. Why am I expecting it to sell? The overall narrative is that we got to the gap high. We fell off the gap high and started one-time framing yesterday, expecting the one-time framing to continue. So if anything, it might push to yesterday's point of control, which is either 25 for MP, and 20, actually it could be the point of control. John, do you have a point of control at 27.25? Do you have a point of control at 23? I show it at 23 here, but my IRT is showing it up here at 27. In either case, around 25, 27, it might push to there, but overall the market is looking like it is likely to continue the one-time framing down from here to expand. Okay, 27, yeah, that's what I thought. Thank you. And so I'm expecting that to continue. It may not hold the 15 area, okay? So we're at 910 right now, may not hold the 15 area, may go back into value, and we may see it at the 19. The 19 comes to us, the overnight high at 19.25 here, comes to us from the one-time framing low of 2 days ago. It's the same price right here is where the overnight high is. So it may squeeze through into the yesterday's value and potentially push through to 1922 or so, if not 25.27. But I'm expecting it to flow downwards. I'm expecting yesterday's low to be taken at 45.07. If it doesn't, my hands are off the keyboard. Or the mouse keyboard. That's like back in the equities So's Bandit days, used to trade with keyboards. Now it's a mouse. Hands are off the mouse until it decides to breach. What I don't want to do is trade in here. I don't want to trade in balance, because when the market's in balance, there is no edge technically. unless you're scalping or something, there's no repricing needed. So my services as someone who's coming in to take inventory, to bring the market to balance, those services are not required, and in general just get chopped up and lose money in there. So that's where we stand. So that's the primary scenario. The secondary scenario is we open, we do push yesterday's low. We find that 4,500 is being supported as a major strike, and then we impulse up back into prior settlement and start walking ourselves all the way back through to this 30 area from down at 4,500, giving us 30 here, giving us yesterday's kind of resistance area, and that would be scenario 2 for today. 30, 32, 30 to 33 is about the range that I'll be looking for on scenario 2. That's what that looks like. The NQ looks about the same thing, lower high, overnight high in the NQ, 15,529, very close to that similar one-time framing low from a couple days ago at, what was it, 37 or so. That's like a quarter of a rotation for the NQ difference. And the expectation in the NQ is open, squeeze up, open auction, in range, out of value, squeeze into value, and then hold here, and then start to shift down and explore lower. Again, NQ has put in a pivot high, and the expectation is this is likely to continue lower. If not, if the NQ tests lower and gets an impulse, then it's likely to push back through all the way back up into this resistance area up at 15,630 or so. That's where I would be looking for the NQ to check. But you know, we're in balance, so we're kind of, you know, I know I'm speaking from both sides of my mouth here because we're in balance, and it could go either way. But the more likely play is to break higher. Now, we talked about this in crude. We said, hey, this is balancing, chill, let it break, and it's likely to break to the upside. Crude broke to the upside pretty good yesterday, and has pushed through the 89. Again, the century figures here are pretty big at 90. I'm expecting this thing to bounce here today for the rest of the session. I'm not expecting it to open and run again. I'm not expecting a trend to follow the action that we saw yesterday. By the way, yesterday the action finished pretty weak. So if we look at this, let's look at this. So we had a gap in crude. This is RTH only. We had a gap, right? Tested the gap. Then we have a gap and go situation all the way up to 89.37, and then we formed this pretty orderly balance zone in crude, and then we finished underneath it. This is not bullish, okay? So crude is expected to just form another box up here, box after box after box. So crude is expected to form another box here, and as you can see, it opened at the high tick and is responsive this morning and is breaking down. It's the high so far is the opening print in crude at 89.25, and that's likely to be pretty difficult for buyers to overcome. I'm expecting crude to bounce for at least a couple of days here. Again, same scenario as here. We called it right on the day after the rally that this is very likely to bounce, and it did for a few days. I'm seeing the same action here unless there's news, okay? That's a lot to cover. Good luck, and I'll catch you tomorrow. Take care.